Welcome back to the channel, and thank you for joining me. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one piece of logic at a time. Today we're exploring a trend-following expert advisor called Aroon Trend Shift. It's built around the Aroon indicator, a tool designed by AtrStopMult that measures how recently a market has printed a fresh high or a fresh low. Over the next several minutes, you'll learn exactly how this strategy defines a change in trend, how it confirms that signal, and how it manages its risk. Let's get into it. And remember, this is educational content only. So what exactly does Aroon Trend Shift do? At its heart, this is a trend-following expert advisor. Rather than trying to catch exact tops and bottoms, it aims to identify when the balance of momentum has clearly shifted from one direction to the other, and then it looks to travel with that move. The engine behind it is the Aroon indicator, developed by AtrStopMult in 1995. What makes Aroon a little different from many indicators is that it doesn't measure how far price has moved. Instead, it measures how recently the market made a new high or a new low. When fresh highs keep appearing, the Aroon Up line rides near 100. When fresh lows dominate, the Aroon Down line takes over. The strategy watches for the moment these two lines cross, because that crossover marks a change in which side is printing the more recent extreme. But a crossover on its own can be noisy, so the strategy adds two layers of confirmation. First, the winning line has to be strong, reaching a threshold of 70, which tells us one side is genuinely making fresh extremes rather than drifting sideways. Second, the closing price has to agree with a 50-period exponential moving average, giving an independent read on the underlying direction. For risk, the strategy leans on the average true range to size its stop to current volatility, and it sets a take profit as a multiple of that stop distance. This kind of approach tends to suit patient, trend-oriented traders who are comfortable on the 1-hour time frame and higher, and who prefer liquid instruments like major currency pairs or metals. As always, this is educational information, not financial advice, and trading always carries the risk of loss. Let's walk through the exact logic the strategy follows, step by step. Everything happens on completed bars, so the expert advisor waits for a candle to close before making any decision. That avoids reacting to the noise of a bar that is still forming. First, it calculates the Aroon indicator over a look-back of 14 bars, both for the most recent completed bar and for the bar before it. This lets it detect a genuine crossover. A bullish shift is registered when the Aroon Up line, which was at or below Aroon Down, moves above it. A bearish shift is the mirror image, where Aroon Down climbs above Aroon Up. That cross is the primary signal, the moment one side begins making the more recent extreme. But the strategy does not act on the cross alone. It applies two more conditions. The winning line must reach the strength threshold, set by default to 70. This filters out marginal crossovers that happen inside choppy, directionless conditions. On top of that, the completed bar must close on the correct side of the 50-period exponential moving average. For a long, that means the close is above the moving average. For a short, the close is below it. Because these two filters are independent, one measuring the recency of extremes and the other measuring price against its own mean, together they sharply reduce false starts. So a long is signaled only when there is a bullish cross. Aroon Up is at least 70. And the close is above the moving average. A short requires the exact opposite on all three counts. Now for risk. When a position opens, the strategy places its stop loss 2 average true range units away from entry, so the stop breathes with volatility. The take profit sits at 1.8 times that stop distance, defining the reward to risk balance. Once price travels one full stop distance in favor, the stop is pulled up to the entry price. So a trade that was working is protected from turning into a loss. And if an opposite confirmed shift appears while a position is open, the strategy closes that position, and the next qualifying bar may open a trade in the new direction. Let's look at the actual MQL5 code the expert advisor runs, just as you'd see it in MetaEditor. At the top are the input parameters you can adjust. AroonPeriod sets the 14-bar look-back. StrengthThreshold is the 70 level the winning line must reach. AtrStopMult is the 50-bar confirmation average. AtrPeriod, AtrStopMult, and reward risk ratio control the volatility stop and the target, and lot sets the order size. Below that are the signal conditions. The bull cross is true when Aroon Up was at or below Aroon Down on the previous bar and is now above it. The bear cross is the reverse. The long signal combines that bull cross with Aroon Up reaching the strength threshold and the close sitting above the EMA. The short signal mirrors it exactly. Now look at the buy block. When the long signal is valid, the code reads the ask price, sets the stop loss one risk distance below it, where risk is the ATR multiplied by the stop multiple, and sets the take profit at the reward to risk ratio times that same distance above entry. Then it calls trade.buy with the lot size, stop, and target. The sell block is the symmetric opposite. It reads the bid price, places the stop one risk distance above entry, sets the take profit the reward to risk multiple below, and calls trade.sell. Notice how both sides share identical structure, just with the direction flipped. That symmetry is what keeps the strategy balanced between longs and shorts. Now let's bring it all together on an illustrative chart and watch the strategy trade, moving one candle at a time. On the price chart, you can see the blue line weaving through the candles, which represents the 50-period exponential moving average, our confirmation filter. In the panel below sits the Aroon indicator with the green Aroon Up line and the red Aroon Down line, plus a dashed marker at the strength level of 70. We begin on the left, where price is drifting gently lower into a shallow base. Because the market keeps touching fresh lows here, the red Aroon Down line is riding high near the top of its panel, while the green Aroon Up line sits low. The strategy simply watches. There's no crossover and no reason to act. Then the mood changes. A firm bullish candle pushes up off the base, and the very next candle drives to a fresh high. Watch the panel. The green Aroon Up line leaps upward and crosses above the red Aroon Down line. That crossover is the primary signal, and at this moment Aroon Up is comfortably above the 70 threshold, so the shift is decisive rather than marginal. The final piece falls into place too, because this candle closes above the blue moving average. All three conditions align, and the buy entry marker prints beneath that candle. The stop loss is set 2 average true range units below entry, tucked under the recent swing low, and the take profit target is placed 1.8 times that distance above, reflecting the reward to risk ratio. From there, price does what a trend follower hopes to see. Each following candle carries higher, making fresh high after fresh high, so the green Aroon Up line stays pinned near the top of its panel and the red line fades away. As price travels one full stop distance in favor, the strategy quietly pulls its stop up to the entry price, protecting the position from turning into a loss. Price continues climbing until it reaches the take profit target, and the long trade closes at the upper take profit marker near the peak. A clean, completed trend move. Now the character of the market flips. After that peak, a reversal candle forms, and price begins rolling over. As the market starts printing lower lows, the red Aroon Down line climbs while the green Aroon Up line drops back. On the next candle, price breaks lower and closes below the blue moving average, and in the panel the red Aroon Down line crosses above the green Aroon Up line, pushing above the 70 strength level. That's a confirmed bearish shift with all three conditions satisfied, so the sell entry marker appears. This time the stop loss sits 2 average true range units above entry, just over the recent swing high, and the take profit target is projected the reward to risk multiple below. Price then works steadily lower, printing a run of fresh lows that keeps the red Aroon Down line dominant near the top of the panel. Again, once the move covers one full stop distance, the stop slides to break even. Price presses down into the target, and the short trade closes at the lower take profit marker. Notice the rhythm across both trades. The strategy never tried to predict the exact top or bottom. It waited for the Aroon lines to cross, insisted that the winning lines show real strength at or above 70, demanded agreement from the moving average, and only then committed, with its risk defined in advance by the average true range. That patience and structure is the entire idea behind Aroon Trend Shift. That brings us to the end of our breakdown of Aroon Trend Shift. We covered how the Aroon indicator measures the recency of highs and lows, how a crossover combined with a strength threshold and a moving average filter defines a confirmed trend shift, and how the strategy manages risk with volatility-based stops, a reward to risk target, and a move to break even. Everything here is for educational purposes only. It is information about how a strategy is built, not financial advice, and not a recommendation to trade. Every strategy experiences losing trades, and no approach works in all market conditions. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like to see explained next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.